Good morning, everybody. Christopher from Serene Education with my analysis this morning on the majors, particularly the pound against US dollar for Thursday, the 4th of October 2018. Hi, guys. Australia and New Zealand dollar is where we need to be focusing our attention. I mentioned at the start of the week that there was opportunities starting to unfold within the commodity crosses, and bang, we've had it. Some great movement for the Australian and the New Zealand markets. So I'm going to spend some time looking at crosses with the Australian market, or the New Zealand market for that matter. One that has got opportunities and has seen opportunities, especially after the Conservative Party, Theresa May, having a speech yesterday and doing a thing. A lot of good stuff coming out of that. Pretty poignant on points regarding Brexit, but also poignant points on trying to keep the stability within the Conservative Party. And yeah, it's all good, rosy, far better than the Labour stuff that we saw earlier. But nonetheless, yeah, pound is looking a little better compared to the Australian market in that case. So, straight off the bat, I'm looking at the matrix. Always start with the matrix, guys. As I mentioned to you in my analysis straight away. This little bug over here is the important one on the chart. This is where all the goodies is packed into. The rest of it is just pretty much going to paint a stronger confirmation of direction. Price is what we need to be reflecting on anyway. But the MA, Daniel, you'll see that the monthly and weekly MA is the issue with this particular pair. However, everything else is looking kind of rosy. Daily, the MACD is not all that great, but the actual matrix is pretty much singing that we should be looking for buying sentiment. Now, if we look at the overall picture, you can see that we came from a low point over here, or over here, took the low point, and you'll see a low point in 2016, 2017, lots of support, consolidation support that is, and then we had a nice breakout towards the latter part of 2017, and then the rally as we headed into the start of 2018. Having said that, price was still trading below the 50-period moving average as we headed into 2018. We needed to see price above that. We didn't get it. We got this evening star formation. So after this bear candle over here, which was in, what are we looking at here? February, March, April, May. We're looking for June candle to close low to confirm that this was genuine selling sentiment, and we could look at that level over there. Prior 2016, 2017 lows of viable target level. That failed to materialize. Why? Because the candles after that, June, July, August, September, have all started to move back up. So we know that the candlesticks are emphasizing that the underlying algorithm is picking up more signs of bullish underlying sentiment. So even though we had this bearish formation, we should have seen a red arrow to concur or to conform that there was genuine selling numbers increasing and buying numbers decreasing, and that was not clearly the case. So that evening star formation was null and void because we didn't see a continuation into June and July, and therefore that red arrow didn't appear because there was clearly nobody selling. Okay, so pay attention to these things, guys. Even though we got strong confirmation from sellers itself that there were potential genuine sellers around, you can see that the algorithm was still saying, hang on a moment, yeah, there might be selling around for that time frame, but not genuinely enough to actually shift the entire market from a positive aspect to a negative aspect. And yeah, so June didn't give us a closed low, therefore we had this bullish Arami, which meant that we could see potential price or buyers coming back into the market again to retest the current high that we saw through the first quarter of this year. And rightly so, you can see last month's candle touching the 50-period moving average. So we know that there's underlying bias of bullish underlying sentiment still in this particular pair. Having said that, we're now going into a squeeze pattern. Okay, a wedge, ascending wedge. Okay, you can clearly see that price is being squeezed now. We need to see something giving. So ideally, yeah, there were opportunities made, and yeah, I did take some sneaky trades to start this on Monday in particular on this particular pair. I've now banked my profit. Look, there's still enough for this to move further on the intraday time frames. I'll just go down to the weekly now just to reiterate that moving to the upside. My concern is, you can clearly see we had this is an inverted hammer which gave us this strong support mechanism on this uptrend, which emphasized that we could see price retesting the high. And that's where I took my trades to, the high of the inverted candle. It is a strategy in itself. If you have an inverted hammer, and if that's genuinely buying sentiment, then look to see if we can target the high of the previous candle, which it did. It's now heading into territory where there's going to be a lot more risk holding this particular pair because we're trading into a ceiling level. So if you're looking to try and get 80 more pips out of it, look, I'm not saying it can't be done. It's just that you can clearly see we're moving into that area, so this becomes more riskier to hold long. Okay, so if you are trading it, it's got to be trading intraday really aggressively and knowing where your targets or TP levels need to be. And you can clearly see I'm trading back into that again. My objective, looking ahead now, is to give this week to the market. Okay, it's Thursday today, tomorrow's Friday, not from payroll. There's going to be a lot of volatility around. We had Australian trade balance figures last night, which were stronger than expected. They were expecting a contraction, so 1.548 billion Australian dollars before. Their forecast was 1.430 billion, so a drop of almost half a billion Australian dollars, and it came out at 1.6. So trade balance figures are still stronger for this one. So that's played little effect because price is still moving to the upside. Clearly, you can see that as we stand at the moment. Now very little wick on the upside, so clearly everybody is still buying. There are opportunities here, guys. However, just be aware of the risk because you're trading into a yearly resistance level high. The good thing is, though, if I just pan out, you will notice what price is doing now. If she gets above this 200 period moving average, she's now trading higher than she's been than 2016. Okay, that's a good sign. So we've gone full circle now, and that would then mean we should be looking for further opportunities as we head into the end of the year and the start of 2019 to areas around there, particularly as a viable long-term target of in excess of just 1800 pips. Look, we're going to see price obviously dwindling in between all that, but the most major one is going to be that level there. So I'm more than happy in giving a bit extra to the market to give me a stronger confirmation of a breakout above that area, because you can clearly see at the start of the year through March and April we had a lot of wicks when we were testing this level. So if we get a nice strong juicy close above that level, you can bet your bottom dollar traders will start to look at that as a very strong positive aspect for the pound against a weaker Australian dollar, and that would then mean price will then rally higher with less risk and more probability, and therefore that's what we want as traders. We want a more assertive picture to unfold. So there has been opportunities. There currently still is opportunities. If I drop down intraday, you can clearly see we still get buying sentiment over here on the matrix. It's all looking good. You'll notice that we've now broken above the high for September. So October is looking good because now we've broken above this level over here. Perfect. Our weekly R2 level is 50 odd pips away from it, but then you can clearly see now that our monthly R1 is also in the same area. So that becomes a strong, solid resistance level. So if I just pan out now and take that level and move it back to the prior resistance level highs, you'll notice that, yeah, we've got consolidation taking place at this point of here. So just be mindful of that. There is better opportunities, I think, personally, in the months ahead for this particular one. For all you intraday traders, yes, there clearly is opportunities. You can clearly see here, that was the great breakout that we saw yesterday. Okay, above the 200 period moving average, fantastic. Everything is looking fantastic at the moment now. So look to the upside on this particular pair. Yeah, that's pretty much where I'm going to leave it. So hope you have a fantastic day. Ensure that you follow the rules to the T and dot those I's and back it up with strong money management. Trade serenely.